Welcome, everyone. Today, we're diving into a topic that might not sound glamorous at first, but trust me, it's crucial for anyone who wants to understand the nuts and bolts of financial management, especially in a business context. We're talking about asset depletion. Now, before you roll your eyes and click away, let me assure you that this is more than just a dry financial term. It's a concept that can make or break a company's long term success. So, stick with me as we explore what asset depletion is, why it matters, and how you can effectively manage it. So, what exactly is asset depletion? In simple terms, it refers to the gradual reduction in value or usability of an asset over time. This is especially relevant when it comes to natural resources. Think about it, every time we extract oil from the ground, mine minerals, or cut down trees for timber, we're depleting those resources. They're finite, which means if we're not careful, we could exhaust them entirely. And that's not just bad for the environment, it's bad for business. Imagine running a company that relies heavily on a particular natural resource. As that resource depletes, you might find yourself facing increased costs, reduced productivity, and ultimately a significant hit to your bottom line. No one wants to see their revenue streams dry up because they neglected to manage their assets properly. That's why understanding and managing asset depletion is so critical for maintaining financial health and ensuring long-term sustainability. Let's break it down further. First off, we have natural resources. These are assets like oil, gas, minerals, and timber. Each of these has its own unique challenges when it comes to depletion. For instance, the oil and gas industry is constantly grappling with the fact that as they extract resources from mature fields, they need to invest in new exploration methods, often in more challenging environments, to find new reserves. If they don't, they risk running out of resources and ultimately going out of business. Then we have minerals. Mining companies extract valuable minerals like copper and gold, but without sustainable practices, those deposits can be depleted quickly. The key here is to adopt responsible mining practices that ensure these resources remain available for future generations. This involves everything from efficient extraction methods to exploring alternative sources of minerals. And let's not forget about timber. We all love a nice piece of furniture or a good book, but unsustainable logging can lead to serious depletion of our forests. Responsible forest management, including reforestation and selective logging, is essential to ensure we can enjoy these resources for years to come. Now, it's not just about tangible assets. We also have intangible assets, which can be just as critical, if not more so, to a business's success. Patents, copyrights, and trademarks are all valuable assets that can deplete over time. For example, patents typically last about 20 years before they expire, which means that once they do, competitors can jump in and potentially take away market share. It's a race against time to innovate and create new products before the old ones lose their exclusivity. Copyrights, too, eventually enter the public domain, which can diminish their commercial value. And trademarks. If a trademark isn't actively used or protected, it can become generic, losing its distinctiveness and value. So, businesses need to be proactive in managing these intangible assets just as they would with physical resources. Let's not overlook the human resources aspect either. People are a company's most valuable asset, but they can deplete through retirements, attrition, or lack of development opportunities. Investing in talent management and continuous learning is essential for nurturing a competent workforce. After all, a knowledgeable and skilled team is a huge competitive advantage. Now, let's talk about financial assets. Market fluctuations, poor investment decisions, and economic downturns can all lead to the depletion of financial assets. This is where diversification comes in. By spreading investments across different asset classes and sectors, businesses can protect themselves from the risk of depletion in any one area. So, how do we account for all this? Accounting standards like GAAP and IFRS provide guidelines on how to recognize and measure asset depletion. There are several methods for accounting for depletion, including the cost depletion method, the percentage depletion method, and the units of production method. Each of these methods has its own nuances and is applicable depending on the type of asset and the specific circumstances. For example, let's say a company owns oil reserves that cost $1 million and has an estimated recoverable reserve of 100,000 barrels. If they extract 10,000 barrels in a year, they would calculate their depletion expense based on the cost per barrel, which would be $10. That means they've recorded a depletion expense of $100,000 for that year. Simple, right? But it's crucial for accurately reflecting the company's financial health. Now, let's get into some practical strategies for managing asset depletion effectively. First and foremost, sustainable resource management is key. This means using advanced technologies to extract resources more efficiently and minimizing waste. For instance, mining companies can implement innovative extraction methods that reduce environmental impact. Conservation practices are also essential. Regularly monitoring resources and adopting efficient consumption methods can help prolong the lifespan of valuable assets. Sustainable agriculture, for example, employs practices that ensure farmland remains viable for years to come. Innovation and technology play a significant role as well. Investing in renewable energy or developing eco-friendly materials can help reduce reliance on non-renewable resources. Companies that prioritize innovation not only protect their assets, but also position themselves as leaders in sustainability. Diversification of assets is another effective strategy. By expanding the range of resources or investments held, businesses can reduce the risk of depletion. This could mean investing in different geographic locations or diversifying product offerings to explore alternative revenue streams. In conclusion, managing asset depletion is vital for any business that relies on natural resources, intangible assets, or even human capital. By understanding the types of assets that can deplete, employing effective accounting methods, and implementing proactive management strategies, businesses can ensure their long-term sustainability and success. Remember, it's not just about protecting your assets, it's about being a responsible steward of the resources we have. Companies that take asset depletion seriously not only secure their own futures, but also contribute to a healthier planet and economy. So let's keep this conversation going, and together we can build a more sustainable future. Thank you for tuning in.